Hey guys, what's up? It's Louie Miele here, back for another YouTube video. Now, Andrei Jikh has just revealed why his form of investing is the most reliable strategy out there, and there are definitely some claims to back it up. Now, if you don't know who Andrei Jikh is, he's a fellow YouTuber in the financial space on YouTube. He has about 625,000 subscribers as of recording this video, and if you've ever seen any of his content, you will know that this man loves dividend investing. Now, recently, Andrei Jikh uploaded a video to his YouTube channel where he interviews the man Raoul Pal. Okay. He introduces Raoul Pal as being a former hedge fund manager. Now, throughout this interview, they go back and forth about a few different topics that all pretty much relate to why the stock market doesn't always go up. Throughout this interview, Raoul Pal talks about how the stock market goes up and down in the United States, but overall has a trend of going up, and how Wall Street will use this to tell you to invest your money into the market because you will always make a return. Raoul then flips this idea on its head by giving us examples of different markets that have traded sideways for multiple years now. Markets such as Japan, Europe, Taiwan, and South Korea have all traded sideways for multiple years now. After Raoul is done explaining this, Andrei then takes the leap and asks him how he feels on dividend investing. Raoul then explains that he thinks it's a smart way to invest, and it's probably the only way to guarantee you make money in the market. Now, if you don't know what dividend investing is, I'm going to explain it for you and then go over why it is one of the best forms of investing and how it's one of the safest forms. Now, if you go to any random stock right now, let's say American Airlines, MGM, Carnival, Apple, Microsoft, Boeing, if you were to look at any of those stocks, they have something called a dividend. And the dividend simply stands for the amount of money that that company will pay you every year just for owning their stock. Now, let's say that we have a hypothetical company. It's trading at $100 per share, and its dividend number is 15. What that means is over the course of a year, just for owning this $100 stock, you would have received $15 for owning it. Now, not all stocks have a dividend, and if they do, a lot of them are really small and aren't worth much. 15% is a completely outrageous number to go by. It's more along the lines of 2% usually. Now, what Andrei does is he finds the best stocks with the highest dividends and creates a whole portfolio out of them so that every month he's paid by these companies that he owns stocks in. This payment doesn't come in the form of the stock's price rising either. The stock's price could stay the exact same after you get a dividend. A dividend is just a payment into your brokerage account. So again, if we went with the hypothetical trading at 100 and its dividend is 15, that stock price will still be $100 after you get the $15, but the $15 will be put directly into your account and will be sitting there waiting for you to use. Now, the reason that this is a very smart investment strategy is because of a few things. The first thing that we already went over is that the stock market is not always guaranteed to go up. It could actually go down for a very, very long time. Or it could simply trade sideways, as I explained with a few other countries. But no matter what the market is doing, if you have invested into a reliable company, that company is going to pay you whether their stock price is going down, up, or whatever it's doing. Another reason that this is a smart investment move is because particularly right now in the United States, we have an overwhelming population of boomers, and all of these baby boomers are ready to retire, and what that means for them is they're ready to pull all of their money out of the stock market so they can live off of it for the rest of their lives. But for people like you and I, that means a mass exodus out of the stock market, which is going to lower stock prices. And if there's enough people leaving at once, the entire market could go down. So we could see the markets consistently go down or stay flat for a long time. We simply don't know. But it's in times like those that the conventional investor is going to start losing money, where the dividend investor is actually going to continue to make the same amount of money they made, if not just a little bit less. And the last reason that makes dividend investing really attractive is that the stock market right now is highly comprised of businesses buying their own stock to raise the price. So a lot of companies' stock price is very overinflated right now. And what we like to call that is a bubble. Now, when this bubble bursts, we're going to see a lot of stocks drop in price and the overall market go down, which again means the conventional investor is going to see losses where the dividend investor isn't going to see much of a change. Now, with this investment strategy, along with any other investment strategy out there are drawbacks. One of the drawbacks to dividend investing is that there is a lower potential for growth. The stock market as a whole seems to go up about 9% on average each year, where dividend investing is going to get you probably around a maximum of 4% each year. But the 4% is guaranteed and the 9% is just on average. So it could be a lot lower or a lot higher some years. The second thing is that dividends aren't guaranteed to you. The dividend score that you see on a stock is solely based off of the last time they paid their investors. So if you see a stock that's paying 4%, that means that last time they paid their investors, they paid out 4%. But these companies aren't obligated to pay you that 4%. They could come out and say that they're going to drop their dividend and pay you 2%, 0%, anything they want to. Although most companies are going to be very against this as it ruins trust with their investors. And the second part to dividends aren't guaranteed is that companies don't have to pay you on a regularly quarterly basis. They could pay you 4 times a year if they'd like, they could pay you 2 times a year, or they could pay you once a year. So what this means for you is that you could have very irregular income throughout the year if you were going to retire off this or just live off of dividends. But again, most companies stick to a quarterly basis where they are going to pay you every quarter, and the amount they pay you is most likely not going to be less than it was before. Now I know that I said in the case of an economic downturn that dividend investors would be relatively unaffected, and that's because they would still see their dividends come in, but the overall price of the stock they bought to get that dividend could go down. Well, in an economic downturn, your stock price could go down to $50 a share, making your overall portfolio's worth go down by 50%. So you could have invested $200,000 and now you're only sitting there with $100,000. But even though you're sitting there with half of the amount of money that you used to have, you're still receiving your dividends. And this could work in the complete other direction too. You bought that hypothetical stock for $100, but now the economy's doing really good and that stock price goes up to $150. You just saw your $200,000 investment turn into a $300,000 investment, and you're still making money off of dividends. So the overall takeaway is that dividends are money that a company pays you simply for owning their stock, and having a dividend portfolio is a portfolio completely comprised of those kinds of stocks where they pay you every so often simply for owning the stock, and your portfolio rises in price because of it. So no matter what the economy looks like, you're still going to be making money. If you guys found this video informative at all, maybe leave a like, a comment, subscribe if you really enjoyed it that much. And if you want to support me in any way, I've made a Patreon. I have that link down below in the description. As well as if you use my affiliate link in the description to open up a Webull account and deposit $100, you don't even have to invest the $100, just keep the $100 in the account. You can get 2 free stocks, that's free money, and one of those stocks will be valued up to $1,400. Or maybe you want to use Acorns. I also have an Acorns affiliate link in the description. And just for using that affiliate link, you get $5 and so do I. So I hope you enjoyed that video. Don't forget to buy low, sell high, and I'll see you guys in the next one.